Hello, this is hopefully quite a short video going through tasks 1 to 4 of the second Osborne Tutor Zone practice assessment on maths, so level 3 maths. So just going to share my screen. Okay, so, oops, hang on a minute, let's start at the beginning. Right, so task 1. This task is about costing techniques. Identify whether the following statements about costing types are true or false. So the value of inventory under marginal costing is lower than the value under absorption costing. Well, that's certainly true because with marginal costing, we know that we include the prime cost, which is the direct materials and the direct labour, and then we add in the variable production overheads only. So that's going to give a lower value than with absorption costing, where we add in the fixed production overheads as well. The marginal cost of a product always includes the variable production overheads. Yes, I've just said that, so that is also true. Oops. Which two of the following would always be included as part of prime cost? So prime cost is the materials, the raw materials. So materials to maintain production machinery, well, they're not raw materials. Materials for a special order by a customer, yes. And then we want labour that's actually to do with the production. So labour to part assemble a product. I'll just stick that there. Would be part of it. Whereas labour to reset machinery for a new component, that would be indirect labour, would not be part of the prime cost. Production wages have been incurred in the month. Identify the journal entries required to record the production wages. Well, we know production wages is an expense, so the production account will have to be debited because it's an expense, and then the wages control will be credited, because what we're saying is we owe that money to the workers, and then of course as all good control accounts will be cleared once the money has been paid. In July, Crossways Limited, an engineering company, is making 2,500 units of product TR65. It issues 8,470 kilograms of metal costing £15,450 to production from inventory. So we've got to identify the correct journal. So if it's coming out of inventory, so I always think of this as inventory as an asset. So if it's coming out of inventory, it's reducing the asset. So it must be credit inventory. So I've narrowed it down to one of these two, and it's being issued to production. So it must be debit production because that's an expense, and then credit the inventory because we're reducing the asset. So now bear in mind that this now continues on, right? So we're in part B, we're told about this metal, and now we're carrying on. So the specialist coating for product TR65, so this isn't the metal anymore, this is the specialist coating. Sorry, hang on a minute, just want to change that. So this is the specialist coating for product TR65 was ordered once in July using the economic order quantity. The following details are available. Right, so the economic order quantity, otherwise known as the EOQ, is the thing that's got the square root of 2 cod and chips as the formula. So it's 2 times the cost of ordering times the annual demand, divide by the cost of holding, that's the chips, so 0.5. Don't forget to press your equals button and then square root your answer. right? So you're basically using this formula that you should have memorized. So that gives us an answer of 2,000 kilograms. So what that is that we've just worked out is that if we order 2,000 kilograms of specialist coating at a time, then we are optimizing between placing orders every 5 minutes, which would obviously have a very high order cost, versus only ordering like once in a blue moon, which would obviously have a very high holding cost. We're trying to optimize that by using the 2 cod and chips formula. So there you go, 2,000. Calculate the total cost of the July order of specialist coating. Well, if we're going to order 2,000 kilograms, and I can see that it's £3.30. £3.30 is the cost per kilogram. So that comes to £6,600. In addition, the following costs have been incurred in producing 2,500 units of TR65. In addition, right? So we already know that we've got some metal costing 15,450. We have now calculated that the cost of the special coating is 6,600. And then we've got all these additional costs as well. So it says calculate the total prime cost of TR65 in July. So to work that out, I need to add together the cost of the metal, which was, I'll do a little work in here, which was 15,450. I need to add on the cost of the coating, which I've just worked out as 6,600. And I know that prime cost also includes the direct labour. So if I add those 3 there together, I get a prime cost of 42,730. I'm then asked for the marginal cost. Well, I know that the marginal cost is the prime cost and then add on the variable overheads. So my calculation now will be 42,730 plus those extra variable overheads, 6,000. So that gives me a figure of 48,000. Oh, where's it gone? 48,730. And then the total absorption cost. So absorption cost is my marginal. And then I need to add in, let's just go back up. I need to add in my fixed production overheads, which are 3,420. So that gives me an absorption cost of 52,150. Okay, so just excluding the admin overhead there, which of course is a non-production overhead. Part C, Crossways Limited has been working on a batch of product CF76. So this is a different product now, due for delivery in August. At the start of July, work in progress was valued at 6,855, with the following further costs incurred in July. So at the start of July, we've got work in progress. So that must represent materials, labour and a share of overheads for work that was completed in June. So then we're going to add on to that with these further materials, labour and overheads that have been incurred in July. We've been asked for the total absorption cost. So that's simply going to be all of them added together. So the cost that we'd already incurred, plus the extra materials, plus the extra labour, plus the production overheads. So if we add all of that lot together, we should get 49,155. At the end of July, careful there, the way it's worded. At the end of July, 4,100 were completed and 500 were partially completed. The partially completed work in progress units were 50% complete, right? So clearly 500 that are half complete is equivalent to 250 fully complete. So therefore, I have made 4,100 that are fully complete, plus these 250 that are partially complete. So that comes to 4,350 units, equivalent units, I should say. Right, so then the question is asking, calculate the cost per equivalent unit. Well, I know I've got a total cost of 49155, and I know I've just calculated I've got 4,350 equivalent units. So if I do the 49155 divide by the 4,350, I get £11.30 as the cost per unit. Part 3, calculate the closing value of work in progress of product CF76. Well, the closing value of work in progress, so I know that I've got work in progress, remember it was these 250 equivalent units. So if I do 250 multiplied by that £11.30 that I've just calculated, that will give me the closing value of that work in progress. Task 2. Attributing costs. So Crossways Limited uses absorption costing. So overheads are allocated and apportioned to departments using the appropriate basis. Identify the most appropriate basis for each of the following overhead costs. So we're not having to do it, we're just ticking. So depreciation, so that won't be allocated. It'll be worked out on the carrying amount of the machine. Power, it's obviously going to be power usage. Light and heat is to do with space, so that would be floor space. And then department managers' salaries, well, they're usually allocated because you would have like the manager of a particular department and all of their wage would be allocated to that department. Okay. The value of overheads incurred by Crossways Limited last month was higher than the overheads absorbed. So, am I going to do this one? Let's try a strike through. There we go. So Crossways Limited, so will they have under or over absorbed the overheads? Well, if we've incurred more than we absorbed, we must have under absorbed. So let's see, there we go, lovely. So we've under absorbed. This will have, so will it have no effect on profit? Will it increase the profit? It's not very well worded there, is it? Or will it decrease? Well, if we've under absorbed, that means we have to put in extra expense. So more expense will decrease my profit. So we will leave that one. Shed World Limited makes sheds. It has 2 production departments, cutting and assembly, and 3 departments that support production, which are maintenance, stores and administration. Budgeted overhead costs have been allocated and apportioned for the next month. The overhead costs of the support departments needs to be reapportioned to cutting and assembly. Right, it's telling us how we're going to go about doing the reapportioning. Okay, so that's just information. It then asks us to complete the table by reapportioning costs based on the information given. We have to enter our answers to the nearest whole pound and use minus signs or brackets to indicate any negative. So quite specific instructions. So they've already done the allocate and apportion down to this row here. So now we are reapportioning administration. So we need to go back up and we see that administration is 50% cutting, 30% assembly, 8% maintenance and 12% stores. So all we need to do is get our maintenance figure. Sorry, not maintenance, admin. It's admin that we're doing first. So we're going to start with admin and we're going to take it out of admin. So I'm going to put that in brackets. And then we're going to do 50% to the cutting department. We're going to do 30% to the assembly department. 8% to maintenance. And 12% to the stores. Right, then we come to the maintenance department. So what I'm basically trying to do is reapportion everything that's in maintenance at this point. So I have to add together the 34,900 and the 5,360. And it's that figure, 40,260, that is being reapportioned. So how am I going to do it? Let's go back up. So it's done on the basis of hours of maintenance. So we can see we've got a total of 1,000 hours, 750 of them are cutting. So I'm just thinking, well, 75%, 25% is probably the easiest way to approach that. So 75% of 40,260 is 30,195. And the 25% of that figure is 10065. Always worth a double check that the two numbers you've got add back to what you wanted it to be. And then we do the same for stores or similar for stores. So we've got 51,080 plus 8,040. So that gives me a total to subtract of 59,120. That's going to be reapportioned. So what we're doing for the stores, right, so we've got to add these two numbers together. So that comes to 6,000. And then I'm going to do 3,600 divide by that 6,000. And it's that proportion that I'm then going to multiply by the 59120. All right, so just to be clear, I'm doing 3,600 divided by the total. So both these two numbers add up to 6,000. So 3,600 divided by 6,000 and then multiply that by your 59120. So that gives you a figure for the cutting department of 35472. And then for assembly, we're going to do 2,400 divide by 6,000 and then multiply by the 59120. So that gives us 23,648. Again, just double check your two numbers add together properly. And then we come to our totals. So the total should still be the same, 172,718. Cutting will be 13,083 plus 33,500 plus 31,95 plus 35,472. And let me just get that right in the corner if I can. So that gives us a figure of 112,250. We add up assembly, so just adding down that column, 60,468. And then just double check, do those two numbers add up to your total? Yes, they do. Shed World Limited uses activity-based costing to calculate overhead rates. So remember, activity-based costing is similar to absorption costing, but it absorbs the overheads in a more accurate and precise way. So it looks at what drives those costs. It puts all those costs into pools, and then it basically apportions them in a fairer way rather than just using labour hours or machine hours. So for the cutting department, this is the number of setups for each production run. And for the assembly department, it is the number of inspections. Right, so we've got budgeted setups and inspections, and we've got actual setups and inspections. Right, so what do we have to do? Calculate the overhead absorption rate for the cutting department using the total overheads in part B, but basing it on the number of production runs. Okay, so what we've got to know here is that overhead absorption rates are always based on budgeted figures. So if we look at the budgeted overheads for the cutting department, you can see here 112,250. So 112,250 is the total budgeted overhead. And then we are going to divide that, rather than dividing it by number of units or labour hours or machine hours, we're going to divide it by the budgeted number of production runs because we're using activity-based costing. So 112,250 divided by 25 means that per production run, it's going to cost 4,490. So bear in mind, it sounds like a big number compared to like per labour hour or per machine hour. But of course, if it's only that amount per production run, there might not be very many production runs. There's only 25 altogether. So each one is going to take a fair hit. Then we have to do the same for the assembly department based on budgeted inspections. So let's get the figure. So we've got 60,468. And we're going to divide that by the 36 budgeted inspections. So that gives us a figure of 1,680. Incidentally, when you're doing the exam, if you had one of these, well, this number wrong, let's say, the 112,250, but you did the right thing, so whatever wrong number you had, if you then divided it by 25 and put what the answer was in here, you would still get marks, get own figure marks for carrying on doing the right thing with even though you've made a mistake earlier on. All right, so don't be too disheartened and never give up. Don't just stop because you think, oh, I don't know how to do like part one, I can't do any of the rest. Just give it your best shot and then carry on doing the right thing with the wrong number. Calculate the overheads absorbed for the cutting department. Right, so we know from our absorption costing that this calculation will be the amount, in this case, per production run. So 4490. And we multiply that by the actual number of production runs, which was 23. So that means that I am going to absorb 103,270 pounds worth of overhead. The overheads absorbed for assembly. So same principle. So we're going to take the 1680 that we calculated. So that's the cost per inspection. We've actually had 40 inspections. So if we times that by the 40 inspections, that gives us an overhead there of 67,200. It goes on. The actual overhead for the cutting department was 101,260. We have to calculate the amount that's under or over absorbed. Right, so we've got 101,260 and we absorbed 103,270. So we are over 103,270. Subtract what we actually spent. So we are over, therefore, by 2010. So let me do this. Oh, I didn't want to do that. Sorry, hang on a minute. I wanted to under or over, so I want to cross out the under. Yeah, there we go. So we have over absorbed. Oh, sorry, I was supposed to do it here. Get it right in a minute. There you go. We have over absorbed by 2010. Right, task 3 is about short-term decision making. So identify whether, hang on, the following statements about break even are true or false. So fixed cost divide by contribution equals break even volume. I'd rather it said contribution per unit, but I think it's close enough. So yeah, that one will be true. So I don't know if you can see this on your screen, but my news is just flashing up for some reason. Right, there we go. The break-even point is where sales revenue equals total variable costs. Well, no, the break-even point is where sales revenue equals total costs. So not just the variable ones. Match the following definitions with the type of cost behavior. Seeing if I can get a line. That looks good. Right, so the total increase in set increments at set volumes of output. The total cost goes up at set increments. That just means stages or steps, really. So that one is going to be stepped cost. Total cost remains constant at all volumes of production. So the total cost staying constant must be a fixed cost. The Worcester dining room is a restaurant capable of seating 60 people or covers. The costs of running the restaurant are as follows. Food and consumables variable, labour semi-variable, come back to that in a minute, building and finance, which is fixed. The forecast for an average of 50 covers a night is shown below, and we have to complete the table to show the profit for 50 covers. We've got to calculate the variable and fixed elements for both and calculate the forecast profit. So in other words, we've just got to fill in this table. Okay, so where did I have this? Oh, here we are. Right, so 50 covers. So we've got revenue, variable cost. We've got to figure out the components of the semi-variable cost, right? So let's sort of deal with that first. So whenever I see a semi-variable cost, I know that I need to use the high-low method. So where's the best place to do this? It's just about, let's do it at the side here. Right, so I'm going to have a high of 50 covers, which is costing, we need to go up to see what that was. Oh no, sorry, we've got a high of 60 covers, apologies, 60 covers at a cost of 12,500. And then I've got a low of 50 covers, I'm getting this from up here, 50 covers at a cost of 11,450. So whenever we do a high-low, we start by finding the difference. So an extra 10 covers has cost me an extra £1,050. So therefore, an extra 1 cover. So if I divide my 1050 by 10, an extra 1 cover must have cost me £10.50, which is my variable cost per cover. So I can use that now. So I know it's £10.50 and I want 50 of them. So let's do £10.50 times 50. Just going to do this on my calculator. I haven't filled it in, so hang on a minute. So £10.50, oops, £10.50 times 50 is 525. So that's my variable element. And then to work out my fixed element, I now need to feed this. So if I know that 50 covers is a total of 11,450, and I know that the variable bit of it, oh, hang on a minute, if I missed a zero out there, that doesn't look right. £10.50 times 50. Have I not divided that right? 1050 divided by 10. Oh, I've been a donut, haven't I? Whoops. That should have been 105 and that should have been 5250. I do apologise. Right, so therefore, going back to this, it just didn't look right. It looked too small. So 5250 is the variable being subtracted from the total of 11,450. So the answer to that gives me my fixed. So 11,450 take away 5250 gives me 6,200. And then I can work the rest out. So revenue, take away the variable cost, take away the semi-variable cost, take away the fixed cost is giving me a profit of 4,850. So you could check that that works. And then the profit per cover, so that would just be the 4,850 divide by 50, which comes to 97 per cover. And then for 40 covers, so if the revenue is 46,250 for 50, so if I divide it by 50, I basically get what it is for 1. And then if I times it by 40, so 46,250 divide by 50 times by 40, I get 37,000. Do the same principle for the variable cost. So I'm doing 18,750 divide by 50 times by 40. That gives me 15,000. Then the variable element here, so remember I knew it was 105, not £10.50, whoops. So 105 times 40 is 4,200. Fixed is fixed, so that must still be 6,200. My fixed costs are fixed, so they must still be 11,200. Sorry, it's going a bit skew with, but you get the idea. And then my forecast profit must be 37,000, subtract 15,000, subtract 4,200, subtract 6,200, subtract 11,200, which leaves me with a profit of £400. Per cover, 400 divided by 40 gives me £10 per cover. So you can see quite a dramatic shift from £97 per cover if we do 50 down to £10 per cover if we only do 40. And that, of course, is because we've got quite a high proportion here of variable costs. Sorry, fixed costs. It's getting late. Right, the owners of the restaurant are considering extending to provide al fresco dining in the garden, delivering a different menu. The following additional information is available. So we've got revenue per cover per day, variable costs per cover per day, fixed costs per cover per month. And we have to calculate how many times each cover must be sold in the garden to break even. Right, so this is a break-even question. So I want my fixed cost, which is 72. And then I'm going to divide that by the contribution per unit. So contribution per unit is £20, subtract 12. So I'm doing 72, divide by 8, which means I've got to do 9 covers to break even. A covered heated dining area could be offered in the garden, which would be expected to increase the average sales value by 50%. So 50% up on 20 would be 30. And variable cost by 25%. So 25% onto 12 brings that one up to 15. I'll have to write it at the side here because it won't let me do it straight underneath. Right, so my variable costs are now 15. My revenue is now 30. But there's an additional fixed cost of 93. So if I add 93 onto my 72, the fixed cost is now 165. Right, so enter your answers to the nearest whole pound. Revised contribution per cover per day. So contribution, of course, is just your revenue, take away your variable. So 30 subtract 15. The revised fixed costs we've worked out is 165. How many times must each cover be sold in the garden now to make a break even? So we're now going to do the new fixed cost, 165, divide by the new contribution, which is 15. So 165 divided by 15 means I've now got to do 11. Oops, sorry, I didn't mean to do that. 11 per month to break even. Use profit volume analysis to calculate the profit volume ratio for each of the plans. Right, so the profit volume ratio is contribution, this is just the formula, divided by sales. So with the original plan, my contribution was 8 and the sales were 20. So with my original plan, it's going to be 8 divided by 20 times 100, which gives us an answer of 40%. With the revised plan, we've got a contribution of 15 and sales were 30. So 15 out of 30, even I can work out that that's half. So 50%. Identify which option is the most financially, that should probably say, beneficial to the Worcester dining room. Tick the correct option. So clearly the higher the ratio of contribution to sales, the better, because contribution is only one step away from profit. It's a good thing. So the revised plan is giving 50% compared to 40, so that will be preferable. Right, the final task of the computations before you get onto the spreadsheets, which I'm not covering in this video. So task 4 is about understanding principles of budgeting and cash management. Complete the following statement by selecting the correct terms in the brackets. So the standard direct labour cost of a product can be established by multiplying what by what. Well, if it's direct labour cost, obviously this would be material cost, so that's no good. I want the rate per hour, and I want to multiply that by the number of labour hours. Identify whether the following statements about budgeting are true or false. So a budget that is updated to reflect a change in output is known as a flexed budget. Yes, that's what we've been doing all along when we've been flexing our budgets. Just coming up with an update. A rolling budget is a budget that is fixed for the financial year. Well, a rolling budget is one where you just keep on sort of moving it on a month. So you might start with January to December, but then once January's gone, you would then move it and you would have February to January and then March to February and so on. So a rolling budget is not fixed, it keeps moving. So that will be false. Identify whether the following statements about liquidity are true or false. So liquidity is about having enough money, cash, or liquid assets available to pay your debts as they fall due. So increasing customers' credit terms will improve liquidity. Well, if you increase your customers' credit terms, it means they've got even longer to pay you. So you'll take longer to get the money, and that's not going to improve your liquidity situation. Might improve your customer morale, but no, that's going to be false. Arranging an overdraft will reduce the liquidity of a business. No, arranging an overdraft will help you because you'll have money available. So that would increase or improve the liquidity. Oh, sorry, ticked in the wrong place. So that one shouldn't be there. So that one is also false. Liquidity management is important. So a business can. Right, so liquidity management is all about meeting obligations, paying your debts as they fall due. So be that first one. Liquidity would improve if the business paid trade payables. If you pay them slower, you keep hold of the money for longer. You might upset them, but it would improve your liquidity. A business has produced a profit forecast and wants to determine the forecast cash balance by determining which of the following items will increase or decrease the cash. Cash increases will be added to profit. So you see we're starting with profit. Right, so a new loan. Well, a new loan will mean that you've got more money over and above your profit, so add. Drawings, when the owner takes money for their own use, will reduce your cash, so that would have to be subtracted. Proceeds from disposal of a non-current asset, that would increase, so therefore be added. And then accruals. Now this is a little bit grey because it doesn't say accrued expenses. But I think in the absence of any comment, it's fair to assume that accruals will be accrued expenses. So what happens when we accrue an expense is that we put through more expense that we haven't yet paid for. And this is a bit harsh on some of you because you might not have done the FAPS unit yet, which is the financial accounting. But basically an accrual means that you are putting in more expense, which of course will bring down your profit. So what that has done is it's kind of artificially brought down your profit because you haven't actually paid for these things yet. So basically your profit is going to be lower than your cash as a result of putting through an accrued expense. So therefore we need to add that to get from the profit to the cash. Right, last bit. Power to Peddlers Limited makes electric bicycles and sells to wholesalers and retailers. The owners of the business are reviewing the cash management of the business as they wish to reduce the amount of cash used in it. They've asked you to help. You've calculated the business trade payables payment period in days is currently 54 days, and the working capital cycle is 87 days for the 3 months ended 30th of September. So this is just for 3 months, not for a whole year. So what we've been asked to do, calculate the inventory holding period for the 3 months to September. Assume, we've got to do it to the nearest whole day, and we've got to assume that each month has 30 days, even though we know it hasn't. So 3 months of 30 days is obviously 90 days. So when we do our inventory holding period, we're going to do 275,199. We know that we divide that by cost of sales. Conveniently, it's the only figure they've given us, but we know it's cost of sales because it's to do with buying, so it's cost of sales. And then instead of timesing it by 365 for a whole year, we're just going to times it by 90. So let me just see exactly what that gives me. 275,199 divide 325,894 times 90. So I've got 75.9998957 in my calculator. So to the nearest day, that is clearly 76. And then we do the same with trade receivables. And I'm thinking, oh, where's the data? But of course, what they had told me is enough information about the working capital cycle to enable me to work this out, because I know the working capital cycle is inventory days plus receivable days, I'll just call it that for now, that's the figure we don't know, minus payable days, which we've been told up here is 54. And that equals an 87-day working capital cycle. So what we can do is we can now work backwards. So we can do the same thing to both sides. So I'm going to do 87, and then I'm going to add the 54 minus the 76. So 87 plus 54, take away 76, gives me my answer of 65 days. That concludes the paper.